Morning, my name is Scott Forcino. I'm an associate broker with eXp Realty. I founded PlugIntro to assist people in meeting who they should know and in order to gain more and better referral partners. I am really happy that I'm with a friend and a really important realtor in the local area, Rosen, who's done so much in the market, is a wonderful person. She and I have had many opportunities to connect meaningfully outside of real estate, and we really want to take a listen to what Gay has to say about how she works in her local market. Good morning, Gay.
Good morning, Scott. It's a pleasure
So
to be here with you.
welcome. I know you're taking time out of your busy schedule. I know your contacts and clients need to hear more about you. So tell me about you and your market and your experience and how you're navigating today's changing market.
Well, we're just as we were sort of talking about before, it's a challenging market. Now, of course, with the interest rates getting higher, I think it's going to be it might be a little softer in some areas. Those, of course, who can afford a home will always be able to afford a home. But for the first-time home buyers, I think it's going to prove a little more difficult for them. But the market's great. It's the interest rates. I was checking this morning before we came on, is still 5.45 on average. So the mortgage interest rates are still wonderful. I can recall, and I'm sure you can too, many years ago when we bought our home, the interest rates were like over 8, and then they skyrocketed to over 30.
Sure. Mm-hmm.
So 5.45 is nothing. So
interesting. What? Please tell us your market and what company you're with.
I'm with Julia Beefy Sotheby's, and I sort of work primarily Lower Westchester. I live in New Rochelle, and I service the Lower Westchester areas of Larchmont, New Rochelle, Bronxville. I have a listing there right now, Pelham, Scarsdale, and those particular areas, a little upstate. I found that when I have tried to refer my clients to agents in other areas, sometimes they'll come back and they'll say, Gay, they're not you. And so I find that once you go to another area and you sort of review the homes that are available, you do get a general understanding of that area and you can represent clients well. Sometimes you have to refer, but many times my clients just like to stay with me, which is rather nice.
Yeah. And we're not talking about 5 counties away. We're talking about the same county. So yes, the communities are different.
Yeah, it's like a 40-minute drive away. It's not that, and with COVID, everything sort of really changed. That changed the horizons there also. Because people, it really liked for an agent to go and video and send the videos, of the homes if allowed, to them. So it sort of helped things a lot.
Right. I think COVID streamlined things where I know I rented an apartment in Florida, sight unseen, and I didn't even know the community. And I got out and I was mad at the realtor, but not because it was terrible. He didn't tell me how nice it was. I said, I would have been really looking forward to it more if I knew how nice the area was. He didn't tell me. I said, all you hear about is people overselling. He undersold.
Right. No, I'm sure. So that's nice. So where in Florida?
We went during the COVID time, during school lockdown, to Jupiter, Abacoa, and it was really relaxed, really very family friendly, and it was fun. So how are you handling the sellers? With you still getting over asking and multiple offers?
Yes. No, I just I entered a home a week ago and came on the market on the Monday, signed contract by Saturday, and 10% over asking, so it's a very, not as many homes in New Rochelle on the market this year as compared to last year, and a lot of multiple bidding.
Well, I mean, have you come across, I know that the multiple offers led to people waiving their appraisal. Have you handled that part yet?
Yes. Well, the thing is, people are waiving the appraisal aspect because they're offering the no mortgage contingencies. So, and they have to understand that the property may or may not appraise. But I think as a listing agent, when I have that hat on, you look upon bids differently. For instance, I just closed on a property last week that sold over, but just under 25% over asking.
Hmm.
And the area did not command that price point. And we must have received about 18 bids on the property. But the reason my clients accepted that particular bid was that the buyers were putting down over 30%. So that 30%, even though they offered a no mortgage contingency, offset that appraisal differential. And so even though we all knew it would not appraise at the sales price, we knew that their mortgage that they were obtaining would not be offset by that sales price.
Hmm.
So it was, so you have to sort of look at the bids and the structure of the bids sort of more, closely. I'm in contract with another property, and again, it must have been like 15 bids easily, and there were 3 bids that were over asking, over higher than the bid my clients accepted. But one was a mortgage contingency, one had an appraisal contingency, and one they were already saying that they didn't want to close after a certain date, whereas my clients wanted that later rent back period. So they chose a bid that was, say, 700, thousand in cash, a very small mortgage, and it was just the better bid to accept.
Mhm.
So you have to look at each bid differently, So it's not a question of accepting the highest bid. It's the terms. The terms are very, very important.
Hmm. Well, I know in this overzealous market, people are saying no mortgage contingencies. I see that less, or I know of that less than actually no appraisal contingency. We know that New York, especially downstate, like where you and I are, is a lawyer state. I know lawyers say that's a crazy idea, no mortgage contingency. Have you come across people being counseled by attorneys when it gets down to it because the lawyers see the deal after you do?
No, not recently, and especially if you're using a local attorney because they know the way the market is. I will mention several years ago, though, my particular clients, we'd actually had gone to highest and best. My clients decided to place a much higher bid after the fact, and the sellers actually accepted it. So we actually bumped somebody who had received the highest, who had given the highest bid at that point, but my client's attorney was in Abu Dhabi. and he wasn't a local attorney, and he looked at this no mortgage contingency for 2.4 million. He said absolutely not, and then we backed out, and everyone hated us for a while. But they actually, they were able to get the same amount from another agent, so it was all good.
I
But
see.
I think it all depends. In answer to your question, if the attorney is local, then they understand the current market and what needs to be done. But obviously, we have to counsel our clients to, so they're comfortable. I placed a bid yesterday on a property, and I told my clients before we even placed the bid that we weren't going to get the accepted offer because it was a no mortgage contingency. And as long as they sort of realize that, and I said, if your terms are good, then it could equalize the no mortgage contingency aspect. But their terms weren't so good either. And they're taking me to lunch today. Go figure.
Well, they appreciate it regardless of the result.
So it's all good.
What do buyers who are paying 25%, especially in a high area such as yours? One thing that always puzzles me is when do they think they're going to get equity if they're eating up future equity today? I mean, is it just a place to live? They have really no income opportunity because I think the ship sailed on this
Well,
type of appreciation.
I will mention that there were fewer homes on the market last year compared to the year before. And so everyone kept saying like housing shortage and everything. It low inventory. But excuse me, I got to say there were more homes sold last year than the year before. But they were just because of the interest rates, the mortgage rates, there were more buyers looking for those homes. So what I'm seeing this year is that many of the buyers are getting shut out of the multiple bidding situation. They're losing maybe 10 bids, 6 bids on different homes, and they feel very frustrated by the process. What I have seen in Larchmont this year is that many of the buyers are giving these closed, like shutout bids, they're called. And the very first day a property enters the market, they will enter so much higher than the list price that they just want to sort of get the bid and sort of to move on. They may, for the reasons, it could be that they need a home to live in. They want to take advantage of the low mortgage rate. But you're right, with regard to the equity, will there be remorse in 2 years or so? I have clients that I love, and I've said to them that if you're buying a home and you're bidding over asking on that home, think of it on the longevity. Like, for instance, are you going to be living there for 10 years, for the next 10 years? And so just sort of buy for the reason that you're going to be living in a home for a long time. You're going to be enjoy living in that home, and not for like any sort of short term. How I try to counsel my buyers too is that if a home is say 2 million, 2.5 million, and the home was renovated 10 years ago, and you're going to be paying over that list price because everyone else is offering over that list price, then you have to think in terms that when you go to sell in 20 years, that kitchen's going to be over 20 years old. So to me, that's not a good value. So I think you have to purchase not with your heart, but with your head, and to realize that if the kitchen is a brand new kitchen, then in 10 years, perhaps you get some equity back from the home, but not if it's an older kitchen at this point, because we're just seeing that people are just bidding crazy, crazy amounts. And I like to feel that I'm always honest with my clients, and I try to advise them, correctly. I'm very the bid, for instance, I placed yesterday. I told my clients I hated the house. I hope they wouldn't get the accepted offer. I listed all the things that I saw as a layperson that I didn't like about the house, and I always do that, which I shouldn't, but I do. But I think they appreciate me more for that, because it's people like honesty.
I agree. I think that the music stopped on this appreciation. It's been going on since we went in the business, and you've heard the expression where you make your money going in. And I bought a house for $135,000 and did great with it. And now it's probably double what I thought I did. And now I kick myself, but it was great at the time. But I don't think there's another one of those things coming. Where we've gone to, $1 million house today is not going to be 2 million in 10 years. I just don't believe that. So I think I got to think, and we're on being recorded, I think we've totally peaked, maybe even generationally, because there's so many other factors in the country with inflation, and there's so many economic stories, leaving other belief systems aside, that I don't know how that it could be more. And wages and income have not even come close to that. And, you're speaking about some bubbles, Larchmont, Bronxville, Scarsdale. That's not USA. These are bubbles that you live in. Congratulations.
But also, Scott, I will say, though, from what I hear, I mean, the properties in Florida, the multiple bidding, there is multiple bidding, across the country. So, I mean, it is happening countrywide, but as you say, it has to slow down. Because of the economy and, everything. It's just, and you can see on the shelves, like the price of everything has gone up so dramatically. So, so
it's affecting everything. Now, even you mentioned, and I have seen this happen in New York City, when someone waives not a mortgage contingency, but even just an appraisal, that means that regardless of the appraisal, they're paying the agreed upon price.
Mhm.
However, who's to say they will? I had a client that just would not comply. Everyone went crazy, and he said, "I'm not. You're at a closing, so you have no advance notice, and someone does not bring sufficient money." I'm sure you're familiar with the workings of lawyers and case law and judges and courts in Lower Manhattan. That means everyone leaves the closing as a dead end. That money is not liquidated. We're now in a situation where, will the buyer come back to the table with more money? And if he doesn't or she doesn't, then what? So I love that agents are all, taking this step. And I know that it's worked almost entirely well, but no one, I think, is considering the possibility of it not considering well. I'm worried that at some point, some people who are on the more sophisticated side might say, yeah, I'll waive it. And then it doesn't come in. And then they want the reduction. And then, people are negotiating at the table right then. And that involves a bank. So that's a mess.
I haven't heard of that. I did hear of a situation last week where people, there were no pets allowed at a condo in like the 700,000 range. And they went for it was an interview process. And the people had been approved. Everything was great. It was actually, obviously, it was a co-op, forgive me. It wasn't, they weren't my clients. But at the interview, they said, oh, by the way, we have 2 cats. So they just felt, just as you're saying with your stories, that because they were there and they were practically, in the door, that the cats would be accepted, and they were not. And so the deal did not go through. And the property.
That's crazy. They should not have said. I'll tell you my Larchmont dog story. So I was at 1815 Palmer by Turtle Park there, which I loved. And my sister-in-law got a dog, and she came by on the weekends. And then it started burning the grass by peeing in the sun. So I didn't think much of it. And then people said I had a dog. I said, I don't have a dog. And they said, well, we see the dog. I said, that's a family member visiting. And then at the end, when they moved out, they wanted to keep my deposit because the dog had burned so much grass.
Oh, goodness. That's wild.
It's crazy, but I never had the dog, but it visited. So where do you draw the line? And that's.
Well, did you offer the $12 for the seed? And you'll come and water it?
Well, I think you know me by now, so it didn't end that way. But let's just leave that part out. It was crazy, but I mean that's something where you should have told the people, or someone could have said, no, we don't have any cats, and then bring them in. They're not going to get to foreclose for 2 cats. So it's funny how the co-ops are so particular. And you and I speaking about co-ops, the rest of USA doesn't even know what that means. That's really not unique, but almost unique to New York.
Interesting.
Oh yeah, they don't have it. Chicago has some. It's a great history of co-ops if you take a look at it in the city and in Westchester. But listen, where else are you going to get into Scarsdale or Bronxville or Larchmont for about a quarter of the price of a house?
Right. I was noticing this morning that more co-ops have sold this year than, say, last year. And I think because there are people that are getting closed out of those single family homes. Now, I entered a co-op a couple of weeks ago in Bronxville, and it's actually they had purchased 2 co-ops, one next to each other. And so now it's time to sell. And I thought it would be like a wonderful way to sell them together, because everyone that has been closed out of buying that, like $1.5 million home, $2 million home, here's an opportunity to buy 2 co-ops, three bedrooms. You knock a wall down between. You do have permission to do it, and it's like steps away from Bronxville Village. And what do these 2 co-ops offer? 2 large terraces. So to me, you have this great outdoor space, a potential of 2,500 square feet, 3 bedrooms, 3 baths. So it's a great opportunity. It's still available, everyone. It's a wonderful, wonderful co-op. And I will tell you that when I had, I was invited over, I took dinner over to them. The son came in from Hong Kong, from Hong Kong, and I took dinner. I made dinner, Also buco. I was very, very proud of myself, and salad and leek and potato soup. I took over a 30-year bottle of wine, but I took it over to his mum is in her 80s, and I took it over to Victor, the son, and to his mum. And on the refrigerator was a 17-year-old magnet that I had that used to mail, like with the
Sure.
it was still on the refrigerator 2 companies ago.
Of yours?
My
Wow. That's great. Talk about brand recognition.
17 years old, exactly. Yeah. So it was funny, but anyway, but it's a great opportunity. But just as you say, it's like people are buying co-ops because they can't afford the single family home. So my thought was, if you just renovated the two together, it would be a great opportunity for someone. So, and it's and we'll get there.
In a space like Bronxville, you're there for the train, and you're really not, it's much more in and out than maybe a home where you're.
Exactly. So you're 20 minutes away from the city. So it's all about the area, the schools, obviously. People love the school district there. So, yeah. So.
Not at all. And that's something, but another old phrase is the co-ops are the first to go up and the first to go down. So people, it's a much greater alternative to renting, because of the same rental, you could get the tax deduction and possible appreciation. But, those are some of the factors people talking about, the appreciation, getting deals done. Another trend I'm hearing about, and I speak to bankers all the time now through these interviews, is that banks are really leaning on appraisers to go low. That's the way they're hedging their bets. Instead of them having necessarily tightened underwriting guidelines or requirements, they are now saying go low, and basically, what would otherwise be an 80% is almost like or 90%. It's almost like an 80%. They're lending less money.
Well, but also, though, forgive me, though, Scott. I mean, we all saw on the multiple listing service last week how they're now going to be looking only internally at all the pending prices, because the pending prices are so much higher than the list prices that it's actually it dictates how the market is reflected once those properties close. And the appraisers, even though I always write a report for my clients to give to the appraiser. I always like to do a detailed report. But when if you say, oh, these properties are pending, and I heard that they're selling like 200 over, 300 over,
Wow.
they're still looking at that list price, and they are still looking just at the sales price. So it's until those properties actually close, just as you say, they're under appraising in a sense, because they're hedging their bets. But once all those properties do close in these particular areas, they are going to be reflecting a much higher.
Sure. I think that's interesting. So now you're talking about people who bid higher than ask. It's going to set the mark at closing as comps.
Right.
It'll be legitimate because they closed and it's right next door. Mm-hmm. So we're talking almost in a way exacerbating the problem of having higher price comps. And then when listing agents like yourself are not going to want to go low, and I think we're in a place where it's harder to get financing because of the rates, yet the prices are not going down at all. Now we're in New York, we're in a spring market where if it's Arizona or Texas or Florida, there really is no such thing. But here we are, you're going to have do you see buyers coming out more now than before?
No, I think a lot of the buyers have become quite frustrated. And so I think that I placed a bid 2 weeks ago, and there were only there would have been like going to highest and best. There was just a few buyers for that particular property. See that there is, plus so many homes have sold already. I mean, I always like to look at when I'm counseling someone who wants to sell their home. I will say, look, in this price point, as on average, there are 36 homes sold each year in this particular price range. So you want to sort of enter your home earlier in the year as opposed to later, because if on average, and there's no set, number, But if you only have around 36 or so homes and you enter your home later in the year and 20 of those homes have already sold, then you've lost out on 20 potential buyers coming into your home and seeing it and buying it. So
For sure.
list like earlier, but I am seeing not as many. I think buyers are becoming quite frustrated with the process. So
Well, it is. I mean, people do their best. I know they got offers accepted. They've paid for inspections, and then they can lose the deal. I don't know. It's going for a.
the negative sort of thing to mention is that those people who are sitting in their homes who aren't selling because they have nowhere to go in Larchmont when it's sort of when the taxes are increased or whatever, decreased each year. If all the homes around you are selling for like $1 million more, you're sitting there, your taxes could conceivably go up, because if they go on average, for the area, then you could actually be paying more in taxes, even though you didn't sell, buy your home.
Mm-hmm. Sure, that's a great point. And because I know the state of Florida does something where if you buy a house for $500,000, it's just 2% of $500,000 as your taxes, which is great, because if you bought it for $200 6 years ago, your taxes are stopped at the $4,000. So that would be the solution to the problem you just described. But there's another. I was speaking to an attorney, I think who he said he's experienced someone where you buy a house and then the taxes are from the former. So if a house was $700 for 5 years or 9 years ago, and it's 1.1 now, the taxes that you're underwritten for were based on the current taxes, which makes sense. But what are they going to be soon? So that's another form of sticker shock.
Mm-hmm.
That these real estate taxes are based on a new price.
That's right. So, and you hope that all the agents are advising their clients, accordingly. Also, I'm sure that there are some that don't, which is unfortunate, but you have to be, look, when we represent buyers, we always inform our buyers of what everything has been selling for. If my clients are into statistics, many of them are because they're in finance, I like to go back over the years so they can see what the homes have sold for historically over the years, and just so they know exactly what they're getting into before purchasing. You want everyone to be happy, and you want to have those repeat, clients.
Mm-hmm. But even with that advice, it is speculative. No one knows how much, how soon. So you're talking about people who are written for mortgages, even let's say the FHA with the higher ratios, those new taxes can knock someone out. I mean, what's worse is after they buy.
No, for sure. Yeah. No.
And that's something I'm surprised that lenders aren't taking into consideration. They don't necessarily have a built-in margin or cushion where they use the ratios for qualification, but that's today's number, which they know is going to be too low later on.
It's interesting because I was looking at the stats this morning, and I see that in Larchmont, for instance, and we're only doing like month by month, but like say March of a year ago, it was 100%, of a list price. This year, it's like 112%. I mean, the prices are just astronomically so much higher this year than last year. So so it just really is. You just hope everyone will be happy. Remember a few years ago, actually, when there was a dip in the market, and the people that had paid, or perhaps in their minds overpaid, there was quite a few unhappy sellers, because when they went to sell, they had to lose money, or they were losing money if they had to sell. So conversely, now some of those sellers, they're saying now, why didn't I not wait till this year to sell? And they would have made money. Because just as you just said, we can't see the future. None of us has a crystal ball. So and the last a year ago, I remember saying to people a year ago, oh, the rates are going to go up next year. The rates are going to go, but we didn't know when, we didn't know how much. and because they were so low for so long, right? So now all of a sudden they are going up, and they'll be up again in June. So yeah.
It's going to be tough for some people, and that's why people have left the big cities
Mm-hmm.
and gone to places where the South has a lot of states have no state income tax, have lower property taxes, definitely has a warmer winter, and you're seeing this mass exodus.
Mm-hmm. Yeah.
It's interesting. Well, what would you tell if a brand new buyer today in the middle range market? I mean, what should they be doing? How could they prepare for their next purchase?
Well, I think that people like the chaps I'm meeting today, my new friends,
Mm-hmm.
to lunch, to make sure that they've spoken to a mortgage person. If because there are so many multiple bids, to actually go one step further and get a qualified accepted mortgage loan in an amount called a priority loan. And to see a home, you can actually bid, with a no mortgage contingency. And you are already, because you're approved for that amount, and it just needs the appraisal and it needs the address in order to get the final
Commitment, final commitment.
Yeah, commitment. But for the it's very difficult because most people don't want to be in a multiple bidding situation. And just as I mentioned earlier about their softening, I mean, I did obtain an accepted offer a few weeks ago for less than asking. So that's why I'm seeing there is a slight softening there too with some properties.
Mm-hmm.
Aren't as many. I don't not seeing quite as many buyers in some price points, but in the lower price point, buyers are still there. I mean, they are. So
Mm-hmm.
so to advise them, be prepared for multiple bidding, and to choose the location well. Look for the best location, perhaps not the best condition. Because you can always change the condition of a home. You can't change the location of a home. So
That's
the
right.
location is very important. Always buy as large, as large as you can, because we know we all, just as George Carlin said, you have too much stuff. We all have stuff.
That's right.
And the reason we sell a house and buy another is because of the stuff. So there's so much stuff. So to buy as large a home as you can afford, but the condition, just to sort of not to be so picky. I try to tell people too that think of everything as a funnel, and you look for the three things that are really important to you. So if you must have a house with a 2-car garage, okay. So you choose like how many bedrooms, okay, and location. But pick those three things, and everything else. If the kitchen's a little older or whatever, sort of to bear that in mind.
Right.
But the market actually. So here I'm just talking about both sides of my mouth here, my head, because here we have the multiple bidding, and then perhaps, and you're trying to advise your clients to sort of, it's very hard for them to be conservative with their money when everything is like selling for so much higher. Some agents, if someone's approved for $1 million, because of the multiple bidding situation, they're advising their clients to look at the $800,000 homes because they'll be bidding up to that $1 million in order to get it. But to advise clients, I will show my clients whatever they want to see, and then if they really like a home, then we sort of look at it like, what's what are the pros, what are the the negatives and the pluses, and as I say to all of my clients, I want you to come back to me. I don't want you to hate me a year from now. I want you to pick up the phone if I call you to say hi, and I want you to be happy. So
good points.
you just try to advise them so they'll be happy in whatever they purchase.
Mhm. One thing I always say in this PlugIntro platform, where agents like yourself have the opportunity to be seen and be heard through your video interviews, also the chance to invite your local clients and friends and family and business owners into your platform so they can promote your business, promote their business. And that's really something that agents can now do with and for PlugIntro that they never had that chance. I always speak to people about their relationships in closing a deal. Obviously, you can't do it alone. You need lawyers and banks and title and insurance and home inspectors. You need those things. And I think that really it's getting even more important to have trust-based relationships, because all the technology and all the venture capital is going to portals that allow, like Zillow, for the consumer to go directly to the provider, which is the agent. Or in lending, people are doing it on their phone. They're buying cars on their phone. The young people are buying stuff on their phone. They don't have the relationships to even be exposed to a trust-based referral. They don't have a neighbor and say, where'd you get that car? Who's your realtor? Who's your gardener? They're just kind of staying out of the fray blind. And the only thing they've done in the last 10 years, the only thing they have and they are comfortable is their phone. So when I say phone, I mean all the online digital resources that are there, and nobody's putting money into the relationship between you and your colleagues and your local business owners and your industry professional and your clients. It's all on you. So it's a weird thing where you work with a team, but yet the business acquisition is done by you or by those individuals. It seems now through this platform where we have a branded digital exchange of people that really you want to work with and want to work with you. And that's really important.
No, it's a wonderful idea. I mean, I will tell you that a recent property I'm in contract with, there was some work that was required by the buyer. And I was able to call my favorite roofer and plumber, and the work was basically done like the very next day.
Sure.
I mean, because you have people, professionals that you like to work with, that when you call them, they are going to be there for you, and that's very important.
Look how it makes you the resource. I mean, that's why someone should go to Rosen, because she's plugged in, she's in the community, she has the resources, she has the way to make your experience pleasurable. I mean, here's the thing I say. This deal is a hard deal for people, because anything else you want to do, you just go do. Imagine where buyers have to speak to people and then be scrutinized and then be rejected as though you're a bad person or a loser. So, I mean, it's a thing where there's so much disappointment, there's so much energy put towards buying or selling, there's so much money to be made. It's a real tough thing, because where else are you giving this much effort? Where else is your purchase not locked in stone? Do you think you go sign a contract with a car dealer and then you go to there and the car's not there? No, but you can sign a contract with your lawyer and that doesn't give you the house. Think about that. You're still waiting for the other side to respond. You're still waiting. I mean, it's a bunch of steps, then getting the loan, then finding out if the house has all kinds of title problems or structural problems. People, the realtors are going to say that really take this, because it's their business, as commonplace, but for the people, this is a crazy situation. It really is.
No, it's important to recommend, like good attorneys and, good inspectors, and, so that's what we do, we just want to.
What you do, and that's what, I made this platform, I made my own. I'll invite you to take a look at mine, and I have people across the country. It's really important to both work within your comfort, but also allow people in, because they can offer you something. Maybe another home inspector, another limousine company, or a jeweler, or a financial planner could give you the introductions to clients or a client base that you never would have otherwise had.